Morning, everybody. It's 8:41, and it is Thursday the 17th. This is your pre-opening comment video number 2266. So we had a bunch of numbers today, so let's get right to them. Asia is lower again, and Europe is slightly higher. Before the numbers came out today, which was claims, retail sales, and Philly Fed, although that's not everything. The Dow was up 56, and right after the number, it was up 85. It's currently up about 105. NASDAQ was up 170, went to 182. Currently hanging right around there. The S&P was up 25, got to up 29, currently up about 30. Claims were 241,000, and that's a slight versus a slight revision. It was 250 last week. It was revised up to 260. Continuing claims 1,857,000. That is the 19th week in a row over 1.8. Retail sales were surprisingly strong, and I think that this creates a problem. Retail sales up 4/10 versus up 3/10 estimate. X autos up 5/10 versus up 1/10. And X autos and gas, it was up 7/10. So those are pretty big numbers. The Philly Fed number, which was 14 last week, is now 10.3, so that's a little bit down. The upshot of all of this in interest rates was the fact that the 10-year has moved up another 5 basis points, up to 408 from 403. We still have industrial production at 9:15, also capacity utilization. At 10 o'clock we have business inventories and NAHB housing index, and then at 4 o'clock we have the long-term TIC inflows or flows. Most people don't really look at that. I do. That is foreign holdings and buying of U.S. Treasuries, which I think is going to be a problem. The other problem here is that the Fed's cut of 50 basis points now looks as if it is, to say the least, political. These numbers that are coming out bear no resemblance to a weakening economy. The numbers that have been coming out that feed into GDP have been much more positive, and the markets have been higher with the economy not weakening, which makes that 50 basis point move seem excessive. And, as I said, political. Clearly, inflation is not in hand the way that it was. And, the Fed, which says it's data dependent, I think looks like it made a guess that the economy was weakening, not based on the real numbers that were coming out, past retail sales, past consumer spending. And so, I think that this is going to create a problem over the longer term. And, of course, they're still spending like drunken sailors in Washington. Chart on the screen is the nat gas. It is getting to about as oversold as it tends to get. This is the daily. Let's take a quick look at the weekly. On the weekly, it is actually turning back up, having been excessive down here. looks like a normal pullback. MACD getting ready to cross back to the upside. We are long here. I'm not happy about it because it's been down so hard this week. I really didn't expect that, but I may go in there and average down a little, maybe add 50% to the position. It's not a big dollar position to begin with. As far as the rest of the markets, the grains are lower again. Oil is up, as I said, nat gas is up, heating oil up, basically unchanged gasoline. Biden administration still pumping gasoline out of the Strategic Petroleum Reserve into the market ahead of the election. Gold basically unchanged, silver down about 8 cents, copper down another 3.5 cents. The copper is also getting to the point where I think it's probably going to be a buy, especially with these economic numbers. We pulled right back to this area where number one, we broke out on the way to a new all-time high. Number two, we have a lot of closes in this area between, it's kind of broad, but between 411 and 425. Yesterday's low was 429. So, we might have to look at COPX again. As far as, let's see, cotton down a bit, which is surprising with the retail sales higher and apparel being one of the stronger points. Coffee basically unchanged, sugar down a little, cocoa down a little, lumber, just hanging around that 500 number. As far as the dollar goes, interest rates higher, dollar up 103.57. That's up another 18 cents. This is getting a little excessive on the upside. Bitcoin down a little, Ethereum down a little, the bonds down 25-30 seconds. That's almost a point. As I said, the 10-year 408 versus 403. And that's what you have. We also have Taiwan Semiconductor coming back a bit after their beat yesterday, 203.99 up 16.5, 8.1%. Travelers beats 259 up 16, also 6.6%. Beat on revenues and net written premiums higher. PPG with a miss, but also higher by 1.3%. They missed on revenue. They guided below consensus, but has reached an agreement to sell 100% of its architectural coatings business in the U.S. and Canada. That'll bring in about $500 million. Discovery Financial beats by 21 cents, but net interest income increased by 10% year over year. The stock is down $3 at 144, down 2.2%. CSX missed on revenue, sees fourth quarter lower, 33.98, down $1.50 or 4.2. Alcoa beats but missed on revenue, 44.66 up 2.60. Kinder Morgan, one of my favorites, missed by 2 cents, missed on revenue, lowered consensus, 24.50, down 43 cents or 1.7%. And this one, interest-wise, dividend-wise, this one tends to be a star, and Richard Kinder continues to buy with cash his own stock on a regular basis. We're in ET. We were in Kinder Morgan. I like the ET a little bit better. It's a little bit bigger, and, regardless, this is kind of a pick and shovel kind of company, both of these. We're producing oil and nat gas. Somebody has to move it. Kinder Morgan and Energy Transfer are the two. Lucid, 271, down 57 cents. They're issuing another 262 million common shares, and down 17% on that number. Uber news 79.14, down 265 or 3.2, mulling over a bid for Expedia, according to the Financial Times. I don't see how that makes any sense whatsoever, but um, you know, people smarter than me will have to figure it out. All right, folks, let's just take one last look at the futures. The NASDAQ is now up 193, so the progression there was up 170, up 182, up 193. Um, the S&P is up just under 30, so that one is 25.29.30, and the Dow is selling off a little, up 77 after being up about 100 after the numbers. Have a good day. I'll be back later.